Hey Samfam, this is Shreya from Samaya. Now we are going to discuss about the case scenarios. And with regards to the first one, which of the following is most likely correct in relation to obtaining sufficient appropriate audit evidence regarding the existence and the condition of the options here? It is mandatory for the auditor to attend physical inventory counting on the date of financial statements. It is not it is so impracticable that to attend, if auditor had to sign 20 entities, he cannot attend all the inventories, all the go downs for all the companies on the same date, right? On the date of financial statements, that's year end. So not option A. Fiscal inventory counting may be attended by auditor on date of financial statement or at date other than the financial statement in his discretion. No, as early as possible or as close to as possible to the end of the date of financial statement. And the day attendance of auditors at physical inventory counting is impracticable due to the time or cost involved because auditor's office location and plant's location, no, such a mere distance or mere difficulty do not or should not hold the auditor from doing a physical inventory counting. The auditor shall attend at physical inventory counting unless impracticable. What is unless impracticable? Unless the if the entity had got some health hazardous chemicals and all, that is very impracticable to do physical counting of that chemical boxes or chemicals. So it is impracticable with regards to that. However, not the time and cost. However, issue of time and cost involved is not a valid basis for skipping physical inventory counting. That's option B. Option D is most appropriate answer. Below are given certain cluster of matters. Okay, but seeing cluster here, I got remember some keyword kit. Our keyword kit. What difference between the cluster sampling and block sampling? It's in our keyword kit series. I think it is. I think if I'm not wrong, do check that out. Matters which are relevant in planning attendance of auditor at physical inventory counting. So these were all the things, or all the things which are relevant for physical inventory counting. The nature of the inventory, timing of physical inventory counting, and stages of completion of work in progress. These were a few things that were relevant when we go for a physical inventory counting. Nature of inventory, timing. Option A is most appropriate answer. We'll see the other. Valuation of method is something that we use when we audit the financial statements and accounting policies. Not here. And with regards to consideration of perpetual inventory system, also with regards to that accounting policies, risk of material misstatement is with regards to planning of the audit. So option A is most appropriate answer. Which of the following is most likely a logical sequence of steps in relation to attendance of physical inventory counting? Observance, okay, inspection, performing test counts, and evaluation of management procedures for recording and controlling of physical inventory. What the auditor has to do? While first he has to inquire. First he has to inquire with regards to the policies and procedures that the management is following, and then he has to go and observe the how the procedures were being followed, and then he has to inspect and then do performing counts. And so not observance near. First we have to inquire them, like evaluating, yeah, evaluate all the procedures and then do observe the procedures and then inspect the inventory and then perform test controls. Option D is most appropriate answer. First, what auditor do? Auditor inquire the management and get to know and understand the entity's environment and then do audit procedures. Option D is most appropriate answer. During the attendance of physical inventory counting, the auditor inspects inventory. Following outcomes are stated in 1 to 3 are given below. Inspect existence, ownership, conditions. With physical inventory, we get to know that inventory existed or not. But in order to know the ownership, we have to check the title reads or purchase notes or goods receipt note. So with mere physical inventory, we don't know the whether that inventory was belonging to the entity or not. It might be third party inventory also, and condition of the inventory also could be checked through physical inventory. So outcomes of 1 and 3 are established after inspection, and outcome 2 may not necessarily be established. Option C is most appropriate answer. And it was served by the auditors that out of total rice physically counted, 67 were belonging to some third party. What's the treatment of that item in financial statement? We have to not treat anything. That item 67 quintal should not be included in the inventory. Rice would be reflected, no, rice would not be reflected in company's financial statement. Option C, most appropriate answer. We'll move on to our second case scenario here. First, we'll dive into the questions. You see, most of the case based MCQs could be done like from if you started from a question point of view, then you would extract all the points that were given here in the case-based scenario. This is something you have to extract information. You need not read it like a story wise. It would cost you a lot of minutes for you. So for that, first we have to go and ask what was relevant information that was asked in the question and then extract the data from it. That's the best and most effective way to do answers. So since in the first question they are saying as for point one, we'll move on to the point one. Point one is machinery insurance expenditure paid for 1 year ending 31/5/2022 has been included in insurance expense for the financial year 2022. You see, financial year 2021-22 ends with 31/3/22, but they had already paid insurance expenditure up to 31/5/2022. That is, they have prepaid the expenditure for April and May. So what they're asking, that extra balance April and May 2022 must be shown in balance sheet as the prepaid insurance expense, because that's a expense that was relevant for the next year but was already paid in the current financial year, so it's a prepaid insurance expense. As for point two, what is point two here? Personal rent expense of son of one of its directors, Mr. T, has been shown as a rent expense of business. Personal expenditure should not be included in the P&L statement or any kind of financial statements. So the personal expenditure, the amount of personal rent must be subtracted from the rent expenditure. Yes, must be subtracted. Option A is most appropriate answer. As for point 3, what is our point 3? Repair and maintenance for the months of February 22 and March 22. That is within the year was still outstanding. So we have to show it as a liability. Yeah. Repair and maintenance shall be shown in balance sheet as not in advance. They are not expenses, they're payable liabilities. Option D is most appropriate answer. And as for point number 4, what is point number 4? Repairs and maintenance expenditure for the financial year was high as compared to the previous financial year. The auditor, Mr. H, asked the appropriate authority about the reasons for such. Who is that appropriate authority? By appropriate authority, H was referring to, okay, what that appropriate authority is of management. He has to ask the management, not all employees involved in approval of those expenditure, because there exists some internal controls who approves that. All the members, no, not members, any one director, no. With regards to the management, who is a concern with such expenditure. And fifth one is as per point 5. What is point 5 here? While verifying insurance expenses, the insurance policies were not shown. Insurance policies have to be shown, right? We have to know what the terms and conditions and their verifying would provide auditor H with a valid support, proper, sufficient and appropriate audit evidence. This terminology is more close to what the auditor's responsibility were. Auditor has gone for the entity to obtain sufficient and appropriate audit evidence and form an opinion thereof. Option D is most appropriate answer. Now we'll move on to our third case scenario. And the first question is, Mr. Lakshman shall obtain what? Absolute reasonable. You see, this auditor has to obtain reasonable assurance that financial statements were free from fraud and misstatements. Option B is most appropriate answer. And Mr. Lakshman suspect that the cash payments were inflated out of the below, which is most probable reason. They're asking the reason for cash payments inflation, not accounting for cash sales completely. That's suppression of cash inflows, not inflation of cash payments, making payments against purchase vouchers, not only purchase but also like expenditure voucher, etc. We'll see better option, making payments against inflated vouchers. Yes, making payments for inflated vouchers. Yes, they're inflating the vouchers. Just making payments to purchase of vouchers do not inflate cash payments. There's normal purchases. Teaming and lading is also like a suppression of sales. I think this is also a keyword kit. There's a video also on keyword kit with regards to teaming and lading, where teaming is taking out some money and putting it back at a later point of time. Lading is taking out small amounts of money, and with that, that's also separation of receipts. So option C is most appropriate answer. And with section 143(12) Companies Act and Rule 13, Mr. Lakshman shall, this is with regards to report of with regards to fraud, right? How much fraud? Less than 1 CR. So what he has to do? He has to just give report it to the audit committee or the board report within 2 days. We'll see the option. Matter shall be reported to audit committee or board. In other case, this option A is most appropriate answer. Yes. Not and, it's or either the audit committee or the board. For the if the company do not have some audit committees, etc., they could report it to the board. So if the entity has audit committee, it shall report to that or else board. Option A is most appropriate answer. Owing to inherent management regulatory, owing to owing to dash limitations, owing to inherent limitations of an audit, there is a dash risk, complete unavoidable, an unavoidable risk. Yeah, owing to the inherent limitations of an audit, there is an unavoidable risk of some material misstatements of financial statement that would not be detected even though the audit is properly planned and performed in accordance with standards on accounting. So option A is most appropriate answer. As an auditor, what concludes Mr. Lakshman draw looking at a huge reserves of the company and corresponding bank loan? Okay, the entity had a huge cash reserve, plus they also had a bank loan. He has to know the reason why there was a cash reserve and a bank loan together. They could have repaid that, or whether they are planning for any kind of investments, or whether they are planning, whether they had recently sold any kind of immobile property, or whether they had involved in any kind of fraud, etc. He has to obtain evidence for that. Report to central government. It's not a fraud actually. There were cash reserves in asset side and a low bank loan in liability side. This is not a fraud. Obtain sufficient and appropriate audit evidence. Yes, this B is most appropriate answer. So we'll see our fourth case scenario here. First one as per essay 10, which is the following statement is correct. Though law prescribes in sufficient detail the terms of audit engagement, the auditor still needs to record them in a written agreement and also seek written agreement from management that it acknowledges and understands its responsibility for preparation of financial statements. Okay, what they're talking about? They're talking about the engagement letter. What the auditor needs to record, they needs to record the written agreement and also written agreement from management, and understands that responsibility. There has to be responsibilities with regards to the auditor and management in engagement letter, no doubt with that. Law prescribes in sufficient detail terms of audit engagement, and the auditor need not record them in a written agreement except the fact that that law or regulation applies. Okay, what they are saying here, in audit engagement letter, you need not copy paste all the provisions in which the law is applicable. If suppose for a insurance audit or for the bank audit, there were all so many kind of laws that applicable, right, that are applicable. So you need not copy paste all the provisions, but just give a reference of the section number. So this is most appropriate answer. Audit engagement letter, most of the audit engagement letter, we tend to see reference to the section numbers. So option B is most appropriate answer here. Yeah. Or C here, to extract the law need not extract, need not copy paste that, and needs to record in every. However, it need not seek written agreement from management that they understand responsible. No, they have to seek their engagement, or engagement letter should consist of that the management has these responsibilities and they are understanding these responsibilities. What are the management responsibilities? To prepare financial statements as per AFRF, design, implement, maintain the internal controls. They have to know their responsibility with regards to that. And we'll see second question. With respect to the treatment of discount on redemption of points in payback card. Okay, they had some. Oh yeah, here. one of the discounts offered in the stores were through payback cards like gift vouchers, and the management is treating them as a trade discount. No, all the vouchers that were issued need not be redeemed by the customers, right? They cannot treat them as a discount. They cannot treat them as a trade discount. So it has to be discounted when the voucher was submitted by the customer. So they have been suppressing the revenue there. So what should the action of the auditor? Should auditor should place a reliance on the opinion of branch auditor? No, auditor has not come for the entity to rely on the management. He had come whether the management has prepared its financial statements accurately or not, true or fair manner or not. Option A is not wrong. Place reliance no. External auditor has sole responsibility for the auditor opinion expressed, and he should perform procedure to satisfy himself. Yes, option C is most appropriate answer. And what is the main objective of external auditor when he uses the work of internal auditor? To determine which areas and what extent the work can be used, whether the work is adequate for the purpose of the audit. Yes, he has to determine what all areas that he wanted the internal auditor to help him, and till what extent. He should not include should not make internal auditor to make significant judgments and do procedures which contain a risk of material misstatements. So he should option is most appropriate answer. He should direct, supervise, and review work of internal. No audit committee does that. Review the internal audit. No audit committee that's responsible of audit committee. Inquire management on special points in the internal audit and follow up. Of course, that's the duty of internal auditor himself. Option A is most appropriate. The external auditor finds that the branch auditor of an outlet Chennai region. Where is that? Okay. Yeah, here it is. Outlet in Chennai is a verge of getting closed, only few with low value stock, okay? And the sales were only 1,40,000, and auditor consider this component immaterial, okay? All the other outlets are performing well with good revenue, okay? This is an immaterial component. For that immaterial component, it is audited by an auditor who is not a member of chartered accountant. Since it's not immaterial, you just ignore that, and you need not specify that, and it isn't a significant matter. Since professional competence of auditor, the external auditor should himself visit the premise. For an immaterial component, he need not do that. Since the financial statement of the component is immaterial, the provision of 600 do not apply. Option B is most appropriate answer. Auditor can rely on financial statement and branch auditor otherwise qualified. No, we don't want any reasons. We have left that as it is immaterial. And fifth question is which of these is not a factor affecting the external auditor's evaluation of objectivity of internal audit function? Okay, while using the work of internal auditor, what the external auditor has to do, he has to check the objectivity of the internal audit function. In that, whether the organization status of internal audit function supports ability of function to be free from bias. Yes, we have to consider that with regards to objectivity. What is objectivity means? Objectivity is without bias. It is not subjectivity, only selected. This is mostly discussed in audit sampling, etc. That the auditor has to be objective, not a selective, or to have hazard selection with regards to audit sampling. And the difference between cluster sampling and block sampling, which was asked by a lot of us, had it was a video was done on the Keyword Kit Series 6, I think, if I'm not wrong. Do check that out. And whether the internal auditor function is free from any conflicting responsibilities. Yes. Whether the internal auditors have adequate technical training and proficiency in auditing, not in auditing, in the work or in the field that they do. We are the auditors have to do the work. We are here to even direct what the things that the internal auditor have to do. They need not have proficiency in auditing. So this is not a factor that affects the objectivity. Option C is the most appropriate answer. Now we'll see fifth case scenario. First one is dash sets the scope, timing, and direction of audit and guides the development of more detailed audit plan. That is, this is the definition of overall audit strategy. Here it is. Option B is most appropriate answer. And they have given statements. Statements here we have to say whether they are right or wrong. The establishment of overall audit strategy and detailed audit plan are not necessarily discrete. They are mandatory. Yes, they are not discrete. And they are closely interrelated to each other. Yes, overall audit strategy and overall audit or detailed audit plan are interrelated to each other. Statement 1 is correct. The auditor shall establish overall audit strategy that guides development of an audit plan. Yes, before audit plan, we have to do overall audit strategy, then audit plan, then audit program. So both statements were correct. Option C is most appropriate answer. Dash means this amount set by auditor is less than materiality. There were two types of materiality, that was materiality and performance materiality. Performance materiality was set less than the materiality. So option C is most appropriate answer. Yeah. Which of the following is not example of benchmark for determining the materiality? Total revenue, profit and before tax, net asset value. There are all the things that were given in the financial statement which could be a benchmark for deciding materiality for that class of transactions or for that account balance, or none of the above. All the three could be used as a benchmark for determining materiality. And fifth one is guidance note issued by ICA provide guidance and which may arise in the course of professional work. Yes, they were issued by ICI. Statements issued by ICI with a view to secure compliances by statements on some matters. Yes. Guidance are recommendatory in nature. Obviously, they guide the auditor in the professional work. Statements are mandatory in nature. Yes, all the statements were true. All the statements are correct. Option A is most appropriate answer. And now we'll discuss six case scenario here. First question is, what kind of risk is portrayed in the booking of revenue with respect to banquet hall? The hotel has two banquet halls. The documentation available for verification of banquet hall revenue is only invoice raised by the hotel. Okay. And some mail conversation between the customer for finalization of price. On audit trail, it is found that the finance approval of the transaction is only after invoice is sent to them for accounting at final settlement. Advance paid by the client is not vetted by finance team. See, there's so much of lacking with regards to revenue. The auditor suspects a weakness in this system. This is the controls with regards to revenue weren't good enough. They are not satisfactory. We'll see what kind of risk they portray. Inherent risk, no. Since auditor is not involved here, it's only with regards to the entity and its control. It's control risk. When auditor cannot find, that's a detection risk. When there exists prior to the audit, since it was a inherent risk, since there was no kind of relations with regards to that audit here in the matter, B, control risk is most appropriate answer. Which among the following statement is incorrect in context of audit risk? Okay, the more extensive the audit procedures performed, the lower the detection risk. Obviously, detection risk is something that risk that the auditor is willing to be wrong that much, since as he is putting more audit procedures, the detection risk reduces obviously. The greatness or the risk of material misstatement the auditor believes exists, less the detection risk that can be accepted. Obviously, the more the risk of material misstatement in the entity the auditor found, the less he could be wrong, because there already are signs that there's so much of risk that were happening there. So they were right, and audit risk also includes the risk that the auditor may express an opinion that the financial statements. Okay, this is right. This is right. Which of the following statement is incorrect, right? Audit risk also includes the risk that the auditor may express an own opinion that the financial statements are materially misstated when they're actually not. This is actually inherent risk of the audit, right? And this is not the audit risk. Inherent risk, that is. Option C is most appropriate answer, that is which incorrect here. The risk of material misstatement at assertion level has control risk and inherent risk, obviously, right? The third question now. In case of procurement of stores, the auditor also finds a control deficiency in the process of procurement of stores, where a goods receipt note is not prepared at the time of receipt of goods. Okay. On inquiry, the management, the auditor finds that there exists a system control wherein goods receipt is automatically prepared and approved in the system. Once the quantity and price is again entered against the specific vendor. Okay, that's something entered by the third party. This entry on real-time basis and system does not allow backdated entries. Okay, uh, the company cannot make any fraud with regards to the stores and all because it's made by the third party. That's a good internal control. Since compensating controls are identified, if tested and evaluated to be effective, the auditor can rely on the control. Yes, if compensating errors were like 2 to 3 errors, which if a control do not find few misstatements, they were put in a place another control to find out those remaining misstatements, etc., those remaining deficiencies. So it's a auditor even could rely on that control. Option A is most appropriate answer. In context of SA 315, which among the following is not a risk assessment process? Inquires analytical procedures, observation and inspection, external confirmation. The external confirmation is for balance confirmation, not for assessing the risk of material misstatements in the entity. So option D is most appropriate answer. What does the course of action for the auditor for the entity not having a documented risk assessment process? They have to document that, and they have to do. The auditor should obtain management written representations on how risks are identified. Not only identification, but how they were responded also have to be given. The author shall discuss the management on how risks are identified, addressed, and determine whether the absence is appropriate in circumstances or whether it's represent a significant deficiency in internal control or not. B is most appropriate answer. These were the words that we have already seen in essay 315. Option B is most appropriate answer. Now we'll see seventh question. First one, the possible obligation that arises from the past events and whose existence will be confirmed by the occurrence or non-occurrence of one or more uncertain future events not wholly within the control of the entity. You see, there were uncertain future events not within the control of the entity. Obviously, it's contingent. Option C, it's a contingent liability because it's a possible obligation. Obligation is something liability. Option C is most appropriate answer. Which of the following is not correct with respect to the inventory held by Octopus Limited? During the current financial year, the auditor attended the physical verification being carried out by the management, and that's it with regards to inventory. We'll see the options. All inventory units held by company should have been recorded and recognized in the financial statement. Yes, that's true. Any inventory held by third party on behalf of the company should not be included as a part of inventory balance. You see, this third party's inventory should not be included when it's possessed in our, but it's our inventory that was held by a third party. That is, ownership is ours. It has to be included in our inventory balance. Position doesn't matter. All that matters is ownership. Option B is not correct with respect to inventory held by with respect of inventories. Option B is most appropriate answer. And if the management refuses to allow the auditor to send confirmation request to debtors, the auditor should do what he has to do. He has to perform. First, he has to ask the reasons. Then what he has to do? He has to, if he thinks it's reasonable, he has to perform alternative audit procedures. If they were unreasonable, he has to discuss with higher authority like TCWG and all, and has to withdraw from the engagement. Now we'll see, withdraw from the engagement. No, first he have to do what? Consider management request for refusal, or they're asking the reasons and its validity, nature on audit procedures that were put accordingly. That was procedures that were accordingly. Option C is most appropriate answer. Here you have to ask the reasons and determine the nature and timing extent of his audit procedure. That is to modify the audit procedure that he is performing. Option C is most appropriate answer. Which of the following statement is not true? That is false. With respect to liabilities. Liabilities are financial obligations of a company, including owners' funds. No. Liabilities do not include equity. Do not include equity. This is a not true one. Option A is most appropriate answer. We'll see the other. Include borrowing, trade payables, etc. Yes. Verification of liabilities important as that of assets. Yes. Equal weights for assets and liabilities. So option A is most appropriate answer. And we have to say whichever is right here. Two statements were given, confirmation as well as undelivered letters. That the external confirmation that were given by auditor have to be given to auditor, not the client. Yes, that's right. It has to be undelivered letters have to be given to the client. When no reply is received, the auditor should perform alternate procedures regarding the balances. Yes, he has to both do alternate procedures. Both these statements were right. So option C is most appropriate answer. Now we'll see it case scenario. First question. After the appointment of auditor by the company should inform the auditor and file a notice to such appointment with register within how many days? Since he's a statutory auditor, it's 15 days. If it's a cost auditor, that's 30 days. So here is statutory auditor option C, 15 days is most relevant answer. If Mrs. X, who is Mrs. X? X is wife of Mr. X, who is a partner of XYZ Associates, which was appointed as auditor, okay? And the auditor shall take corrective action within how many days? 60 days. You see, all these time limits and monetary limits were discussed in a separate video. Please go and check there. And option B, 60 days, and the face value is 1 lakh. Yes, option B is most appropriate answer. Under which section the reporting of fraud by an auditor to central government is required and what amount? The amount of fraud was in CR. As soon as it touches 1 CR, they have to report to central government. And above in section 143(12), option A is most appropriate answer. What is the requirement of ABC Limited as per relevant provisions regarding maintenance of cost records? We'll see whether cost records is applicable or not. You see, first we'll see the provision here. Cost audit, maintenance of cost records in form CRA1, that has to be maintained in CRA1 format, and turnover of all products or services that is more than or equal to 35 CR. As soon as it touches 35 CR turnover, it has to maintain cost records. Since its turnover is 105 CR, it has to maintain cost records. So in form CRE, maintain cost records is mandatory. Option A is appropriate answer. With relevant to the clause of CARO, the auditor is required to report as to the extent of arrears of outstanding provident fund, that is outstanding statutory dues. On the last day of financial statement, auditor has to report when the statutory dues were outstanding for more than 6 months, exceeding 6 months. Option C is most relevant answer. Now we'll move on with ninth case scenario. First question, which of the following expenses should not be charged to revenue? Okay, we'll see printing and stationery revenue expenditure, power and fuel revenue, salary on wages of employees engaged directly and indirectly in production. You see, if they were engaged in any kind of plant and machinery which has substantial period for maintenance, which is a qualified plant and machinery, then that could be capitalized. Here, the major repairs of fixed assets that increases its productivity. Okay, fixed assets increasing productivity, it should be capitalized. Option D is most appropriate answer. Company should recognize software as intangible software if such software is, you see, as per intangible assets definition, it is eligible to recognize as an intangible asset when it is used in production of goods and services or administrative purpose or even for rental purposes. It could be recognized as intangible asset. So option D, all of the above is most appropriate answer. In case of any intangible assets which is not in active use by the entity, the auditor should check whether the deletion with respect to that intangible asset has been recorded in the books or post approval by the entity's management. So he has to check whether before deletion there should be a post approval by the entity's management, and amortization charge has ceased beyond the date of deletion. Amortization is it's mostly like a depreciation with regards to intangible assets. So since after post deletion, even the amortization has to C is beyond that date. So both A and B seem right. So option C is most appropriate answer. And in respect of provisions of impairment of computer software, impairment for the intangible assets is AS 28. The following expenditure should not be capitalized. That's a revenue expenditure with respect to intangible assets. Development, it's a capital asset. Research phase, it should be debited to P&L account. It's a revenue expenditure. Option B is most appropriate answer. We'll see 11th question here. Mr. M asked about other companies he was intending to perform which audit procedure. We'll see what he asked for. During the course of audit, auditor asked the management about names of our companies operating in similar business so that he can compare companies' figures. During this procedure, M found the gross margin of the company is lower than the industry of fellow companies. Okay, what is he who is doing? He is doing the analytical procedures, all the comparisons of ratios, etc., which is analytical procedures. Option A is most appropriate answer. What is the initial procedures carried out by Mr. M? What he done? He did the ratio analysis, right? Option B is most appropriate answer. Who has right to retain the audit working papers? Auditor has right to do so. Option C is most appropriate. Mr. M decided to go in detail checking sales. That is test of details. Which audit procedure he applied to obtain the evidence? This is not ratio. This is test of details. So test of transactions and test of balances both work. Test of details is checking each and everything in detail. So both these constitute test of details. Option C is most appropriate answer. The impact of the exercise carried on by the company for unbilled challans will have an impact on unbilled challans. What they have impact on the sales and data. That's what, right? Yeah, here unbilled sales were grossly understated and there's no mechanism for challan. Sales were gross receipt. And the company employed a person to reconcile all the challans and prepare the bills and yet sent to be customer, and company asked to seek confirmation of balances. Again, this for debtors. So the sales here and with regards to the data balances. So these two things, gross receipts and debtors, option A is most appropriate answer. Now we'll move on with 12 case scenario here. Consider the following statements for determining sample size for test of control. Okay. Statement 1, an increase in tolerable rate of deviation leads to decrease in sample size. We'll go with our table here. Increase in tolerable rate of deviation, that's the second one, leads to decrease in sampling size. What they have given here. Decrease in sample size. Option 1, statement 1 is right. An increase in expected rate of deviation of population to be tested leads to increase in sample size. We'll just go and check here. Increase in the expected rate of deviation of the population leads to third one. Sampling size would be increased. So option 2, statement 2 is also right. We'll see statement 3, an increase in number of sampling units in the population leads to substantial increase in sampling size. See the here, the increase in number of sampling units in the population have a negligible effect. The last one, negligible effect. So statement 3 is false. Statement 3 is false. Option 1 and 2 are right. Option B is most appropriate answer. Consider the following statement for determining sample size for test of detail. An increase in tolerable misstatement leads to increase in sample size. We'll see here. An increase in tolerance level. Yeah, increase in tolerable level. Tolerable misstatement. That is 1, 2, fourth one. 1, 2, 4. Sampling size decrease. What they have given here. Increase in sample size. So statement 1 is wrong. An increase in auditor's desired level decreases the sampling size. We'll see here in the table. Increase in auditor's desired level, that's third one, increases the sampling size. But they have given here decrease of sample size, so statement 2 is also false. An increase in the amount of misstatement auditor expects to find the population leads to increase in sample size. Yeah, the increase in misstatement that the auditor expects, that is 1, 2, 3, fourth and fifth one. We'll see here 1, 2, 3, 4 and fifth. Sampling size increase. So even they had said the same thing. So option statement 3 is right. Statement 3 is true. Option B is most appropriate answer. Third question is, which of the following is not likely to be correct? That is, which is false in evaluating the results of audit sampling in case of tests of details. The projected misstatement combined with anomaly is the auditor's best estimate of misstatements in population. Anomaly is actually a small deviation which is not a representative of misstatement. That is, it's a lower degree, very small, slight deviation. You see, all the misstatements and including anomaly is the best estimate of misstatement. That is, he's not leaving any kind of deviations also. So this is right. Because of projected misstatements combined with anomalous, okay, exceeds the tolerable limit misstatement. The sample provides a reasonable basis for conclusions about the population. When the projected misstatements exceeds the tolerable limit, what does it signify? It signifies the risk of material misstatement, right? They are saying what they are saying. So option B is might be false answer. So which it might could be an appropriate answer. We'll see the other options also. The closer the projected misstatement combined with anomalous is to tolerable misstatement. You see, this is the tolerable misstatement, and this is what the projected misstatement including anomaly. The uh, closer it is more likely the actual misstatement in the population may exceed the tolerable limit. The actual misstatement may exceed the tolerable limit. That is, The projected misstatement is exceeding the tolerable limit or being so closer to the tolerable limit. So actual misstatement, high chance that it would exceed the tolerable limit. In case of projected misstatement is greater than the auditor's expectation of misstatement used in determine the sample size. Projected misstatement is greater than the auditor's expectation of misstatement. The auditor may conclude that there is an unacceptable sampling risk of actual misstatement in the population exceeding the tolerable misstatement. Yes, see, it is the misstatement, projected misstatement is greater than the auditor expectation. So there is a sampling risk of actual misstatement that's in population. So this is also correct option. So option B, which is incorrect, is most appropriate answer. Which of the following is not likely to be correct? That is false with regards to block sampling. Yeah. I have to tell you one thing. The difference between block sampling and cluster sampling was a video was there in our keyword kit series. Go check that out for clarification. Block selection involves selection of a block of a contiguous continuous items within population. Yes, that's true. Most population from which audit samples are drawn are structured in a way that items are in a sequence that can be expected to have a similar characteristics elsewhere in the population. Hence, it is not ordinarily in the audit sampling. Yes, that's also right. Similar characteristics because they were continuous items. Block sampling has characteristics of simplicity and economy. Yes, it is generally an appropriate sampling selection technique when auditor intends to draw valid inferences about entire population based upon sample. It's not with regards to entire population. That is when he uses a random sampling that each item has equal chance to be selected as a sample. So this D is not so correct. So option D is most appropriate answer. Consider the below steps in relation to audit sampling in a logical order. Okay. Performing audit procedures. In order to perform, what they have to do? They have to do some planning, etc. Projecting misstatements. This is like output. This goes later. And the sampling, design, and selection of items. This is the first thing they have to choose in order to go with the audit sampling. First, what they have to do? They have to select those items, and then what they have to do? They have to do perform audit procedures. Okay, investigate nature and cause of deviation. After having that, what they have to do? They have to, or they will get some deviations and all. What they have to do? They have to find the cause for those deviations and evaluate the results of the sampling. First, they have to project the misstatements, and then evaluate the results of the audit sampling. So the sequence would be like testing selection of the items 3 and do performing 3 1, and then investigating the nature and cause of those deviations and all 4 1 3 4, sorry, 3 1 4, and projecting misstatement 2 and evaluating results 5. So we have to see 3 1 4 2 5. Option C is most appropriate. Now we'll see MCQ, sorry, case scenario 13, where, yeah, first one is statement 1. The company had correctly classified and disclosed outstanding balance of working capital credit facility under long-term borrowings. Working capital is a current borrowing, right? It should not be under long-term borrowings. So statement 1 is false. And statement 2, nature of security for availing working capital credit facility need to be disclosed as have to disclose what security you have put for the working capital in your financial statements. So, 1 is false and statement 2 is true. So option C is most appropriate answer. You see, presentation and disclosure were often the topics which we leave or which we don't pay more attention to. This whole case scenario was with regards to only presentation and disclosure. So make sure you also revise with that. Even in our MTP also they have given few things with regards to disclosures and all. So make a note out of it. And do see this how to write audit answers with regards to that so that we could discuss even the important topics like this disclosures in this attempt and all. So make sure you watch that. Which of the following is most correct as regards to the disclosure of fact of guarantee of working capital credit facility? What are the disclosures with regards to the guarantee of working capital? Disclose the guarantee that were given by directors and relatives, guarantees that were given by director, relatives, and non-related parties. Every party has to be disclosed. Option C is most appropriate answer. As regards to current investments made by the company, which of the following groups contain most valid requirements maintained by law? What they have done, the company had made current investments of 1.1 CR in equity instruments, and the company had also made investments in partnership firm 25 lakh. What they are talking about? They're talking about the disclosures with regard to that, the name of the body corporate they have invested in, and the valuation of the investment, whether the equity shares were valued at what cost and all, etc., and the aggregate amount of quoted investment, all how many debentures or how many instruments that have been given, and their market value. So all these things have to be given. We'll see other options also. Yeah, they have been saying everything the same, but they have missed one or two points there. So here they have given all the items. So option A is most appropriate answer. And fourth one is with regards to current investment, the following classification and disclosure is required by law. What was that? Name of the firm in which is investment made, yes. Name of all partners, total capital and shares of each partner. Yes, stands good, right? The name of the firm that they have made invested in, and all the partners, and the total capital and the shares of those partners. Option A also stands true. And here they have in the other options they have included here is with regards to nature of business of the firm. This need not be disclosed with regards to investments. This is something that was of nature of business. Only we are talking about the investment that is with regards to money. So everything that's regarded to the shares, total capital, and names and investments have to be there. So this is out of the box. This is out of scope of for this investment. So option A is most appropriate and most relevant. The fifth one, regards to foreign currency, with statements earnings in foreign currency regarding exports on CIF basis need to be disclosed in notes to accounts. Not all the transaction with regards to CIF basis has to be disclosed. It could be included in the turnover itself. So statement 1 is not true, and statement 2 is net loss of foreign currency transaction is required to be disclosed separately in statement of profit and loss, which we often do in our accounting, right? Or net loss, the last item in the balance sheet, or P&L account. Sorry, P&L account, last item in P&L account. So statement 2 is right, where statement 1 is false. Option D is most appropriate answer. Now we'll see the 14th case scenario here. First question is, as per para 1 given below is a combination of options which would rectify errors which the combinations are most appropriate. Okay. They are saying that they have some errors in the para 1, so we have to find the best. The purpose of the audit is to embrace the level of confidence. It is to enhance the degree of confidence of the intended users in the financial statement. So we have got two errors here. Embrace is to enhance, and the level of confidence, it is degree of confidence of intended users. And this is achieved by expression of opinion by the auditor on financial statement that are prepared in all critical aspects, material aspects, not critical aspects. This is error 3. In accordance with applicable financial reporting framework in conducting audit of financial statements, the overall objective of the auditor is to obtain reasonable assurance. Yes, reasonable assurance whether financial statements as a whole are free from material misstatement, whether due to fraud or error. No, whether due to fraud or error, not mistake or and errors. It is whether due to fraud or error. Fourth, rectification, thereby enabling the auditor to express an opinion on whether financial statements are prepared in all material aspects, again not critical aspects, in accordance with financial reporting framework, and report on the financial statement and communicate. This is not corroborative, this is communication to TCWG or shareholders, etc. This is communication. Rectification number 5. Okay, 5 rectifications here. We'll see here. Embrace, enhance, level of confidence, degree of confidence. In all critical aspects, there was material aspects. Fraud, mistake, and errors, whether due to fraud, mistake, or errors. And the corroborative is communicative, not satisfy. Not satisfy, communicate. Yes, this is communicate. Embrace, enhance, degree, level in all material aspects, whether due to fraud or error, communicate. Option C is most appropriate answer. And the second question, identify the meaningful and correct statement as per essay 200. It is obtained when the auditor has obtained complete and meaningful audit evidence. No, sufficient and appropriate audit evidence. Sufficient and necessary. No, sufficient and appropriate audit evidence. Yes. Option D is most appropriate answer. And third one is, consider the following statement which may or may not be erroneous. Okay. Statement 1, detection risk related to nature, timing, extent of audit plan to reduce audit risk. No, Detection risk is something that auditor could not able to find the misstatement that were existing. So statement 1 is false. Inference risk and control risk depend upon the audit of financial statement. No, they depend upon the audit risk of material misstatement. So statement 2 is also false. And statement 3 is the acceptable level of detection risk varies in direct proportion to assess the risk of material misstatement. No, indirect proportion. You see, when the risk of material misstatement was high, the detection risk should be maximum low level, because detection risk is that auditor is compromising that there exists some kind of wrong information or some misstatements. When the risk of material misstatement was high, he cannot leave that detection risk ratio or level to a high level, because there were a possible aspect that the material misstatements could happen. So this statement 3 is also false. All the three statements were wrong. Option D is most appropriate answer. 14th one, fourth one, and identify correct group of meaningful word to replace the underlined words in the para 4 in the same order. What they have underlined something in para 4, it seems. The auditor can eliminate audit risk. He could reduce the audit risk to an acceptably low level and appropriate most of the audit evidence on the auditor, which draws conclusion and bases the auditor's opinion are conclusive in nature. No, they're not conclusive in nature. Due to inherent limitations of the audit risk, they are persuasive in nature. Almost all, not conclusive in nature. Further, the matter of difficulty, time, or cost involved is not itself a valid basis for the auditor to be satisfied with the evidence that is less than pervasive. What they are talking here, they have repeated the same thing. Persuasive. Yeah, persuasive option reduced. It is most appropriate answer. Fifth one. Consider accompanying underlined statement. Okay, the state SES deal with general rights of the auditor. SES deals with the responsibilities of the auditor. Whenever you see any objective of any standard, it talks about the auditor's duty, what the auditor had to do, what the auditor's responsibility is. Only one case where we have rights for the auditors in the company audit, not in standards of accounting. So the statement is incorrect. Yes, option B is most appropriate answer. We will see case scenario 15. First question. Respect to contention of the management regarding production analysis and related variances, which of the following what they have told. Ram, I think the author did production analysis and calculated expenditure per unit and found some and variations with regards to previous year and present year industry trends. Then what the management had told, management said they already have explained to cost auditors. Who is Mr. Ram? Mr. Ram is statutory auditor. And the management asked they need not spend their time here. So the correct option here, we'll see. This is auditors need not waste time. No, statutory auditors have to do report about the production analysis. It's not the cost auditors who have to do that. So Mr. Arun should perform production analysis and discuss that variation with the management. This is the most appropriate answer. We'll see the other. Auditor should mention in audit report regarding the variation, and also need to mention separately that management is responsible. So he cannot allocate or shift the responsibility. It is the auditor's responsibility to obtain sufficient and appropriate audit evidence. In option D also, they are saying the fact that production analysis is done in cost audit report, which is to be filed by the board auditors and central government. This is also shifting of responsibility and reporting. So option B is most appropriate answer. He has to do production analysis. And second one is respect to the audit of cash balance, which was the correct course of action. Cash balance with cashier, petty cashier, and impressed balances with employees should be checked simultaneously. Yes, checking simultaneously could reduce the risk. So we could get perfect or correct accurate amount of cash balance in the entity. The cashier should be present while cash is being counted, yes, and should sign the statement prepared containing the details of cash balances so counted. Yes. This is also a good course of action, good audit procedure. Let's see, third one, since the company is having more than one cash balance, the auditor should ask management to get cash balances verified. No, the statutory auditor has to do, because it's a significant matter. It's a risk of material misstatement. It's a high-end risk. The Arun should ask any of the cashiers to verify. No. Only first two statements were right. So statement 1 and 2 were right. Verification of all traveling expenditure by audit team. The following assertions. You see, expenditure is a P&L account, so not valuation. Valuation is for the assets. Completeness. Completeness lies both with P&L and balance sheet. We'll see the other measurement. Measurement is also with regards to the provisions, liabilities, and all. And balance sheet item. Existence is also the balance sheet item. So it is better. Most appropriate is option B. Verifying the employee benefit expenses are fairly allocated between operating expenses included in production activities and general expense. Operating expenses and general expenses. What are those? Those were like presentation and disclosures, right? Presentation and disclosure assertion. Option B. First one, which of the following is correct with respect to the provisions relating to revenue reserves? Okay, the revenue reserves can be used to supplement divisible profits in lean years. Yes, they could use it to the profits that were in lean years where the profits were very minimal, and revenue reserves cannot be used in augment the working capital. No, they could be revenue reserves cannot be used to finance an extension of business. Then why the reserve was to use for the further expansion of the business? Option B is also not right. Revenue reserve can be used to generally strengthen the company's financial position. Yes, 1 and 4 was most appropriate answer. 1 and 4 were correct. Option appropriate answer.